What is going on, everybody? This is S-Trades, and in today's video we're going to be going over prop firms and why pretty much everyone should be using them. And without further ado, let's get straight into the video. So before I start talking about actual prop firms, the main two ways of trading is either setting up a live broker account, right? Just pretty much trading with whatever money you have in your live broker, whatever you kind of deposit into that account, or you go the funded account route. And the funded account route is, in a nutshell, pretty much you are paying a proprietary trading firm for a certain evaluation account, right? It acts like a challenge, and you have to go on and try to pass that account and prove to the prop firm that you can make money. Once you actually prove and you pass that evaluation phase, you now move on to a funded account, and on the funded account is where you could start actually making real money. And to do that, you'd have to again hit certain profit target and then hit certain amount of winning days, and then after that you would be able to withdraw a certain amount from the prop firm account itself, right? But throughout the whole process, this is all pretty much a simulated account, right? Whatever account that you get was still going to be all simulated paper money, and up until you get to the funded account, that's when you have an actual account where you can get yourself paid. So what is a funded account? How do they work? Right, we're going to be using Top Step as an example because it's one of the most famous prop firms at the moment. So what is a prop firm, right? You are pretty much paying a firm a certain amount of money, and in this case you have multiple options. For example, if you're choosing Top Step, they have 3 account sizes, right? They have a $50,000 account, $100,000 account, and a $150,000 account, right? And you have to pay a certain amount to be able to get that evaluation account, and then once you get that, then you have to be in stage 1, pretty much hit a certain profit goal, not lose a certain amount, and then you'll move on to stage 2. So let's say you are picking a $50,000 account, and what are the rules? How do they work, right? So pretty much once you get a $50,000 account, it's usually around $50 for Top Step, right? And not to get you guys confused, because a lot of people think it's some sort of like, it's too good to be true, right? You're paying $50 to be able to have $50,000 in your account. That's not necessarily true, right? There's a trick to it. You don't really have $50,000 in your account that you pay for, right? The $50,000 is pretty much the buying power and the leverage that the prop firm gives you in order for you to be actually trade with big size. For example, you trade NQ, where you could trade multiple contracts. In order for you to do that on a live broker, you would have to have a good amount of money on your account to be able to even place a trade, right? So that $50,000 is not the amount of money you have in the account. It's all just leverage and margin, right? That's all that it is, right? Now, certain rules for the prop firm is you have to reach a certain profit goal, right? And you cannot go below a certain amount, right? So in the case of a $50,000 account, you have to reach $3,000 in profit, and you cannot go below $2,000, right? So the $3,000 is your profit target for you to be able to pass that evaluation account, and the $2,000 is your maximum drawdown, right? So you cannot lose more than $2,000 on the account. If you do, you're pretty much going to blow the account, and you're going to have no account. You're going to have to go back and buy another one, things like that, right? So another rule on Top Step and a lot of other prop firms is a consistency rule, right? So you would usually have some sort of a consistency rule on an evaluation phase. In this case, with Top Step, you have a 50% rule on their evaluation account, meaning that you have to reach $3,000, right? But your consistency cannot be more than 50% of your total profits, meaning you cannot make more than $1,500 on a singular trade, right? So if you, let's say you want to pass the account fast, you would have to make $1,500 and then $1,500 separately, right? In order for you to get to your main goal, $3,000. You can't, for example, make $2,000 on one trade. That's going to violate the consistency rule, and you're going to pretty much have to trade an extra day and make extra money in order for you to satisfy that consistency rule. So that is pretty much the main 3 rules that you have on the prop firm accounts, right? That's kind of how it is across most of the other prop firms also. And what happens once you actually pass that evaluation? So let's say you made $1,000 on across 3 days, right? So you started on Monday, you made 1,000. Tuesday, you made 1,000. On Wednesday, you made 1,000. Now your total profit is $3,000. You pass the account, right? And usually for these types of prop firms, you have to pay an actual activation fee in order for you to get to the funded account. So once you pay the activation fee, it's $160 for Top Step, right? Once you pay that, now you are on a funded account, and that's where you can actually start making real money, right? So the evaluation phase, it's all fake money, all paper trading, right? Whatever you see on your screen, it's all just paper money. It's not real money. You can't do anything with that, right? You don't have that money in your account. It's all paper, right? Even once you get funded, it's still all simulated money up until you reach a certain point to where you could request that payout, right? So once you reach a funded phase, right? Now, what are the rules after that, right? Then you won't really have any consistency rules and things like that. You just have your maximum drawdown limit, which is again still $2,000, meaning that you cannot lose more than $2,000, or else your funded account is going to be gone, and you're going to have to go ahead and start all the way back from the beginning, right? Trying to pass another evaluation account and things like that. So the maximum drawdown still stays as $2,000. And how do you actually start to get yourself paid out, and how do you actually start to make real money? Is by having 5 winning days that are non-consecutive of at least $200 and up, right? So I don't know if you guys got that, but in simple terms, pretty much you have to win 5 days, not in a row. It could be like, let's say Monday, Wednesday, Friday, then another week you have to make another 2 winning days, right? So it's 5 non-consecutive winning days, and they have to be at least $200 and up. So let's just say you made $200 on Monday through Friday, right? Let's just keep it simple, right? So you made 200, 200, 200, 200, 200, right? Now your account balance is sitting at $1,000. You have that 5 non-consecutive, or even consecutive, if in this case, right, winning days. Now you are eligible for a payout, right? So usually you would be able to request half of your profits. So if you have $1,000, you'll be able to withdraw 500, and you would usually have like a 90-10 split with them. So you request anywhere from like 400 or something dollars, right? So that's kind of how this whole system works, right? So let's say once you request that $500, right, on your account, or $400, something with a 90-10% split, then you rinse and repeat the same process, right? So then you have to now get another 5 non-consecutive winning days of at least $200 and up, right? So now let's say you started winning big, right? Let's just say you made 1,000, right? Now your account balance is sitting at like 5,000 something, right? Now you're able to withdraw another half of that profit, so meaning you could withdraw now 2,500, and so on and so forth. You guys kind of get the gist, right? So that's pretty much how the funded accounts work, right? And how you have to go from an evaluation account. Past that, usually pay an activation fee. Once you're on a funded account, that's where you can start making real money. And if you blow the account on a funded account, you start again all the way back from zero, and you're now on an evaluation account, and you kind of rinse and repeat the same process over again, right? So now let's get into the actual pros and the cons of using a funded account in contrast of using a live account. So some of the pros of using a funded account is it's very, very limited risk, right? So you're only risking whatever you pay for the account, right? So in this case, if you're paying for a 50K account and then you pay for the activation fee, you're only paying $200, right? So because $50 for an evaluation account and like another $150 to activate the account. So that's the only type of risk that you're putting onto your account, right? As to compared to a live account, let's say you put up a $5,000 on your account, you are pretty much risking the full $5,000 amount. Obviously, let's say you're not full porting, but the full amount could be lost someday. Let's just say you go on a losing streak, and I don't know, you're risking anywhere from $500 on every single trade. It would take you like a few trades, and then boom, you're gonna end up losing the entirety account. Let's say you lost 10 trades, now your account is gone. Now you lost the total $5,000 on your live account, right? On the funded account, you're only risking for whatever you pay, right? So whatever you're comfortable with paying. In this case, it's $50 and another $150 for the activation fee. So you're only risking $200 to make potential like unlimited amounts of profit, right? Which kind of just depends on you. You know, you could make very large amounts of profits. You can make a little bit. It really depends on how you trade and depends on your as a person. But the only type of risk that you have is very, very limited, right? Second con is it's pretty much very, very beginner friendly. Like let's say if you don't have an initial capital that's like large enough for you to go into a live account, this is what pretty much prop firms are made for, right? You could make so much money with prop firms even with as little as $200 in the trading space, right? You don't really need to have like so much money in order for you to get started with the prop firm accounts, and that is pretty much a very good beginner friendly kind of thing, because a lot of beginner traders don't have a lot of capital to start off with, so they would look into places like funded accounts. A prop firm pretty much gives you the leverage, gives you the money to trade with, and you could, if you're a profitable trader, you can make money off of it, and you could capitalize their whole system, right? Another con is the way their rules are set up. It's both kind of like a pro and a con, because those rules, they are meant for you to fail in a sense, but it also kind of helps you to be a consistent trader, right? If you're just following the rules constantly, and it's like a whole cycle, if you become consistent over the long run, those rules will kind of help you out, because you're not just trying to randomly gamble. You're having proper risk management. You're not over risking. You're not like over trading and things like that, right? On the live account, there's no rules at all. You trade however many times you want. There's just nothing that could stop you or restrict you, right? None of that, right? And on a platform, you have certain rules that you kind of have to follow, or else you're going to lose the account, and that kind of teaches you discipline, and it helps you to become more of a patient trader. Now, some of the cons is these prop firms can become a very repetitive process, meaning that if you're just having like this gambling mindset of, all right, I'm just gonna buy this funded account, pass it really quickly, and then keep on rinsing and repeating, then boom, I full port on my funded account, hopefully it makes it. If not, I'll blow the account and I'll start the process all over again. A lot of people don't realize how easily it kind of starts to accumulate. It might seem like nothing. Oh, I'm just paying $50. But if you're just constantly blowing these accounts, if you're constantly losing those accounts and trying to full port those accounts, and let's say some accounts you pass, so now you pay an extra $150, and it just adds up super, super quickly, and you don't even realize how much money you're paying, because it almost feels like a game in your sense, because you're like, all right, well, I have this challenge that I have to pass, right? I'll make money, maybe I'm not. And you kind of start to gamble those accounts, and this process kind of gets you in a trap where you're just constantly rinsing and repeating this whole process of blowing accounts, getting accounts, blowing accounts, resetting those accounts, and you're just constantly giving prop firm your money. And which goes into our second con. The prop firm's business model is pretty much set in order for you to fail, and that's how they make money, right? The way prop firms make money is literally by you failing accounts, by you resetting accounts, by you paying their activation fees and things like that. So literally the way they make money is by you failing. So their whole business model is just built on top of that. But there are certain traders that obviously kind of overcome that and use that in a very smart way. Like, let's say they have proper risk management, they have a profitable strategy and things like that, which is why it kind of helps them, and they become super, super profitable. They get these crazy big payouts. And yeah, another con is that these rules that the prop firm sets for you, it kind of restricts the way you trade. So let's say if, I don't know, you're like a very high risk to reward trader, and you lose a lot more often than you win, and the consistency rule can sometimes mess you up. Some other rules that are kind of mess up with you. So these rules that the prop firm has, it restricts you in the way that you trade. So you have to be following the way they set up their rules, or else you're just not gonna see any money, right? So those rules are very, very restrictive towards how you trade. On a live account, like I said, you don't have any rules, so this could be both like a pro and a con, like I just mentioned earlier. So although the live account has absolutely no rules, you're completely free to trade however you want. There's no one like telling you this is the max drawdown, this is how much you have to win. You have to win 5 times, and you have to win at least $200 and up in order for you to request any money, right? Because what it does in your head is, once you start to see a day that's at least $200 and up, you might start to cut the trades off early, because you're now psychologically thinking, oh, if I don't secure this winning day, I might not see a payout. So that kind of starts to playing with your head. You like might cut trades off early, or you might let trades run super, super late, and then you kind of get break even or even lose on trades, right? So these rules are kind of always going to be messing with you sometimes, and they're very, very restricted, right? So those are kind of the main basic pros and the cons. But another pro that I forgot to mention that's a very, very big factor is you could pretty much scale and copy trade funded accounts, which is where, when it gets to that point, that's when I believe it's truly better than a live account at some point, because you could pretty much have multiple funded accounts at the same time and copy trade them, and pretty much spread your risk across 5 accounts instead of having one account and you like risking a lot more. So let's say you have 5 funded accounts instead of one, and you risk super minimal. Let's say you only risk $100 per trade, and you make $200, right, across 5 accounts. And let's say you get those 5 winning days, so you made $1,000, right, across 5 winning days. And since you have $5,000, since you have 5 accounts, you copy trade them, and now they pretty much, you have $5,000 in profit, right? Meaning now you could withdraw 50% of that, which is $2,500, right? And you're only risking $100 per trade per account, right? So you would have to go and lose like 9 or 10 trades in order for you to, you would have to go and lose 19 to 20 trades in order for you to lose the account. in comparison, if let's say you were trading one account and you were risking like $500, you would only have to lose like 4 trades, and then boom, your account is gone. So once you get to a point where you could be copy trading multiple accounts and your risk is heavily spread throughout 5 accounts, right? It's not like full on risk with one account. You're pretty much kind of, you could say like you're cracking the system, because now you have 5 different accounts. Your risk is super minimal and your profits are like endless, because now you're trading 5 different accounts, but at the same time your losses are also multiplied. So let's say if you lose $100 across 5 accounts, now you lost $500, right? So you kind of get the gist. Now, before even getting into any sort of like funded or live accounts, obviously you have to have a certain profitable strategy, and you have to have that strategy back tested, forward tested it, paper trade for months and months, right, before getting into any sort of accounts, right? Because if you don't have a profitable strategy that's proven to be working, and you back tested it for years, and you're paper trade, let's say for a few months, and you're like profitable with paper trading, right, and now you start to like kind of forward test a little bit in the live markets, only then I would, even start to think about getting into prop firm accounts. Because what happens nowadays, people just, watch a few trading videos, watch a, strategy video online, and they just jump straight into a prop firm account because they know it's cheap. They have already like this quick mindset of, all right, let me just try to make quick money because I just watched this YouTube video and now I could potentially make so much money because I'm risking so little. And then now they get trapped into this loophole of like, all right, I'm buying this account. Let's say you get lucky, you get like a winning day 2 times, or $1,500, you risk a lot, then you get on a funded account, then now you full port, right? You don't have a profitable system, you don't have proper risk management, you don't have any of that, and now you're going to be pretty much stuck in this loophole of, rinsing and repeating this whole funded account process, buying, blowing, and then resetting, and then you're not going to realize how your bank account is going to deplete a whole lot. But if you're on the other end, right, you say you back tested, you have paper trade for a few months, you're profitable on that, you forward tested, and you have a profitable system, you have proper risk management, then you could really utilize how prop firms work. You could make countless money. You could literally make so much money with prop firms if you only know how to kind of use their own system to your own advantage. So now I used Top Step for this whole example, but I personally think Alpha Futures is the best prop firm at the moment, and I'm gonna make a separate video of pretty much having like a tier list and ranking all the prop firms in the future space right now. But if you do want to get yourself a funded account, I would suggest going with Alpha Futures, because their rules are a lot better than Top Step, and their accounts is also a lot cheaper, right? They don't have activation fees, right? So if you go for a 0-day account, they have pretty much the same exact rules that I mentioned with Top Step, but they don't have an activation fee. They don't have a consistency rule on their evaluation accounts, although they do have a consistency rule on their funded account, but they don't have it. You could pass pretty much an evaluation day with 1 day, and they're also really cheap. If you use my code STRADES, you'll get 10% off, and depending on the promotions they're running, for example, last week they were running 20% off and 25% off, so you could have also used that. And they don't have an activation fee, so the accounts would usually go from anywhere from $70 to $80. So that's the only amount that you would pay for the evaluation account. You wouldn't have to go and pay the actual activation fee. So it's a lot cheaper than Top Step. Top Step, you pay $50, then you pay another $160 for the activation fee, so almost $210 that you're paying. In comparison to Alpha Futures, same exact rules as Top Step, if not better, and you're paying $70, $80 at most. So if you guys want to get into these prop firm accounts, if you already have a profitable system and things like that, go check out Alpha Futures. Use code STRADES for a discount. And if you guys want to get some personal help, you have any other questions, join my free Discord, link in the description, and I will see you guys in the next video.